The S&P turned around on Friday following news that India was negotiating a trade deal with the United States. Tesla stock recovered from a pretty nasty day at one point. The stock was down close to 4%, almost going positive to close the trading day, including the move in after hours. You were positive with the stock closing at $252.90 per share. We also had big news on Friday for Tesla. Tesla has officially launched the lowest priced variant of the Cybertruck with deliveries that start between June and July. Now, here in this video, we have a lot of other big news to share with you, and let's get caught up to speed. But first and foremost, it is a really good sign that you had this buying activity on a Friday, okay? Because over the weekend, there's always going to be more risk that a bad headline comes out, bad news comes out, and markets gap down on Monday. So the fact that people went out and bought stocks on Friday is somewhat a positive sign. Now, does it mean we're in the clear? Markets are going to continue to move higher from here? Not necessarily. The real question is the damage already done in the economy? Is it too late to prevent a recession? Larry Fink says we could already be in a recession. He's BlackRock's CEO. If anyone knows, it's probably someone like him. Jamie Dimon says the most likely outcome from here is a recession, among many other well-known or famous finance individuals that have made, similar calls. Same is true for Tesla. You did see buying pick up into the end of the trading day on Friday, which is a great sign. The Tesla Europe and Middle East X account did post this video of Tesla launching in Saudi Arabia, which does seem to be pretty popular. It does feature the Cybercab, the Cybertruck, and all of your other Tesla models as well at this event. So Tesla is actually entering a brand new market here. Edmonds says the Tesla Model Y is perhaps the best riding SUV in the entire class. And look at this. This is just shocking to me. Okay. How? How does FSD even do that? Like you literally can't even see anything out the windshield. That is impressive. The Tesla North America X account posted on X, congrats to the Giga Texas team on producing their 400,000th vehicle. Stellantis global shipments fell 9% year over year in Q1 2025 to an estimated 1.2 million vehicles, they said on Friday. And Joe Tetmeyer, in his almost daily flyovers of Giga Texas, has spotted a huge new round of Cybertrucks. You're looking at hundreds here that were produced in really just a couple of hours. Tesla has also set the record with the world's largest EV charging park at the Berlin Gigafactory. It features 546 charging stations accessible to the public, including 19 V4 supercharger stalls. And the first Tesla superchargers are now open in Saudi Arabia. And here is that article from Edmonds on the new Tesla Model Y. Quote, it is perhaps the best riding SUV in this entire class and one of the quietest, most comfortable electric vehicles you can buy today. GM is temporarily halting production of its electric commercial van at its assembly plant in Ontario due to slow sales, the company said. The automaker is temporarily laying off 1,200 workers at the plant as a result. XAI is using upwards of $150 million worth of Tesla Megapacks at the company's Colossus supercomputer in Tennessee. And those superchargers that were vandalized, they are back online. Polestar is reportedly closing 72% of its stores in China and scaling back its presence in the country, including exiting a sales and marketing joint venture with a local company due to low demand for its cars. Polestar sold only about 3,120 cars there in 2025. And Tesla has introduced their spring software update, and there is a lot here, so we're not going to go through all of it, but definitely check it out if you own a Tesla. And this is pretty cool. Steak and Shake has partnered with Tesla to give demo drives at one of their restaurants. Steak and Shake on X posted these images and says, our franchise partner decided to throw a party earlier today. Too much winning. So yeah, Steak and Shake is directly backing Tesla. Now, also in some pretty crazy news today, Trump has turned the border into a military zone. He has used the Roosevelt Reservation, a order that the president can do to essentially take control of land at important junctures like the border. Now, this really stretches from here, all the way from San Diego to almost the Texas line. It seems like the Texas line, don't mess with Texas, right? They don't have too much of a problem. It's these other states, and this is where the government's taking control of the border. Now, it probably has something to do with going after like the cartels, Sinaloa, and down here, right? Probably just getting a foothold towards doing actual military operations against them. Also in the news today, there was Iran and U.S. nuclear negotiations that just ended, and apparently there was a positive vibe in the air. Although we don't have the details of this right now, it does seem like things went well. And I mean, if you are Iran and Trump's threatening to take you out over these nuclear discussions, I mean, what choice do you really have? Tasnim News in Iran reports, quote, positive atmosphere in Iran-U.S. talks. So, you know, that should be good for markets. Avoid a war, you'd think would be positive. Now, option activity on Friday for Tesla was actually quite positive. You had 202 different trades, orders totaling $296 million, with a positive order value of 74%. This is for hedge funds and institutions. Okay, this does not include retail investors, so definitely positive there. You did have 427,000 shares that were sold short on Friday, but again, that's not super crazy when there's this much volatility. Google Trends data does look to be pointing lower for Tesla, which is not a super great sign. Cybertruck at 15, Model Y at 17, Model 3 at 14, Model S at 7, Model X at 4. Tesla's global inventory levels still very low, again, which suggests good demand. Model Y's at about 1,400 or so. The Model S at 1,300, Cybertruck at 2,400, Model X at 2,500, and the Model 3 at about 3,900. Some of the lowest levels of inventory we've seen in a long time. The percent of stocks trading above their 50-day moving average did jump up on Friday, up 3.5%. The total up 33.27%. That's how washed out you are right now. Just 3.5% of stocks breaking above their 50-day moving average brings the total up 33.3%. You were completely washed out. You really still are. Only 14% of stocks above their 50-day moving average is pretty rough. That's like some of the lows you had during 2022. We got down to 3%, 5% or so of stocks trading above their 50-day moving average. Twice as bad as anything you had in 2022. Like, again, the lowest you had was around 9%. So, yeah. It's been a rough market if you're unaware of that. Now, the AI Investor Sentiment Survey showed bullish investors did rise over the last 2 weeks from 21.8% to 28.5%. Neutral investors fell from 16.3% to 12.5%. I've never seen neutral investors this low. In fact, the historical average is 31.5%. It's 12.5%. You're what, almost 3 times lower than the historical average? That's crazy. Like, people are either decided here. They're either bearish or they're bullish. Nobody's neutral. 58.9% of investors are still bearish, which is the second highest reading you've had in the last month. So people are still very bearish, but they did get more bullish, which is definitely something you do not see all the time. The CNN Fear and Greed Index is currently at 13. The previous close, you were at 8. So got a little bit better there, but still, again, in extreme fear territory. Now, as I said in the last video, it was a great sign we got above 250 to close out on Friday. Now, your next big level from here is $255. That is your 20-day moving average. If you can get above that, then you could run into the 280s or so. That is where this trend line is here. But really, if you get above 280, you're probably going to 290 to 300 pretty shortly thereafter. Your 200-day moving average is at $290.32, and your 50-day moving average at $291.80. That's probably going to be the level of resistance. Now, in this upcoming week, it's all going to be about earnings. And let me tell you now, you're not going to have a lot of clarity. You're not going to get a lot of guidance, so don't expect that. And, to a certain extent, that may actually be good. If companies just don't give guidance instead of giving what they would have otherwise just given bad guidance, I mean, that it could be a favorable outcome to just not get guidance. Let the markets try to figure out what things are going to look like. And it makes me wonder, again, how Tesla kind of gives a little bit of guidance on that from that perspective. Now, Tesla specifically is beaten down a lot more than other stocks. We have big catalysts coming up in June with the launch of the Robotaxi network. This earnings, not this week, but the following week, you should get some clarity on the launch of the cheaper, lower priced Teslas. That is going to be the biggest catalyst because we really haven't heard anything about it. We're expecting that new vehicle to launch this quarter. Does it get pushed back to Q3? Maybe. Honestly, at this point, I don't think that's a big deal, and I think you've probably already priced that in. But any positive developments from a company perspective for Tesla will be positive for the stock. In my opinion, I think you're set up well into Tesla earnings, although, we'll see what happens. I mean, hopefully China and the U.S. come to terms and start negotiating the trade war. That's where things get much more positive for markets. Although, again, is the damage already done? Are we already in a recession? Now, at this point, the difference could be a shallow recession or a deep recession. If these talks don't go well and there's kick the can down the road a longer and companies can't invest for a longer period because they're not putting CapEx to work right now in this uncertainty, then you just raise the odds of a deeper recession, and pricing that in will get painful. I mean, at this point, honestly, you're not even pricing in a recession on the broader indexes at all. So yeah, that's the biggest threat to markets is, do we go into a recession? Does it start to look like we're going into a recession? Is Q1 GDP actually going to be negative? If that is the case, then yeah, we have bigger issues, bigger fish to fry. But until then, ladies and gentlemen, let me know what you think about this down below in the comment section. Again, to the downside, it seems like we've had a lot of support at that 215 level. If anything goes haywire in this upcoming week, that's the level I would be targeting on the downside. It seems like a lot of demand comes in around 215. If you break that low, though, you're pretty much going to 200. Below that, 280 is that next big level to watch for. So let me know your thoughts on this down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.